Hello guys, I think you are good. So today we're gonna talk about how to do your top-down analysis correctly and get back in after being stopped out and trust your bias. So you're gonna start on the monthly time frame. As you can see, after the market run below this low, where the focus should be, this low right there. But this is a single low, so we're gonna focus on the midpoint of this tail, just a consequent encroachment of it, and how weekly time frame gonna behave into it, gonna tell us how and when you're gonna run below this low. So now as we can see, the market is going low, so we are focusing yet to see a run below this low. So we favor to see the market continue low and takes out this low. What's resting below this low? Sell side liquidity. Good. So that's simple. You just understand that the market is going low and it's going for what? Liquidity. It's short term low. Great. So you mark midpoint of that tail because it tells us how the market gonna get into it and when. Okay. Now we're gonna jump on the weekly time frame. As you can see, the market accelerate lower. Okay. And if you watch my previous video, you can see I was looking to see, I was favoring to see the market continue lower and run below this what equal lows. This low and that low is what if equal. So, and as you can see, the market, there is this inefficiency. This was single pairs at March 13. Okay, so there is this gap. Previously, the market was having difficulty to close below it. See that? And this week, January 13, it completely went through it. Okay, but watch, see what's happened this week. The market didn't touch constant encouragement of this there. Okay, and as you can see, if you are favoring this is a continuation low, that means this week we are expecting to see the market expand lower, not to close down or up close killer, but to expand lower. Okay, below these lows. So now what do we do? We have to go on the hourly time frame to see if the market gonna provide us a narrative to short to be to take part of this move and look to see the market run below this relative equal lows. Okay, so let's jump on daily time very quickly. So this levels of pink and green is this inefficiencies. This one, see, and that one, and this one. That's beautiful. And the market, as you can see, it continue low, run below this low, run close below this green level. Okay, and soon the market trade into this green level, what it becomes an inversion fair value gap. See, soon the market close below this BC. Okay, now it becomes an inversion fair value gap, and if it trades up to it and rejects it, then we can take that information, use it as a subsequent setup to go short and to see the market run below this low. how far can it go through this low where you have consequent encroachment to monthly tail, which is key level because as you can see this week it dropped down, but it didn't touch the low. It didn't touch this line, this dashed line. Okay, so it tapped both of the initials. It disrespect that one, have difficulty to close below here, and just a tap here and reverse on Monday. And so as you can see, we are favoring to see the market continue low. Okay, means we are each day we are looking to see the market expand lower. So that means what? We are coming with the expectation to short GBP USD. Okay, and as you can see soon, this kind of right there close below this daily by side imbalance, sell side inefficiency. It becomes an inversion fair value gap. It becomes an inversion fair value gap. Okay, it becomes a daily inversion fair value gap. Okay, and as you can see, it just creates a fair value gap here. This sells side imbalance by side inefficiency. I don't wanna right because we're gonna be at that point and I don't like that. This is just analysis lines. And as you can see, after Monday one below this inefficiency, it didn't tap consequent encroachment to monthly tail. Okay? And it create a fair value gap CB. Sell side imbalance, buy side inefficiency. Okay? So and we are looking to see the market expand lower. And the market provides us a narrative to rebalance into daily imbalances. And as you can see, this candle completely closed below, completely closed above this fair value gap. But this inefficiency, this unfortunate fair value gap, gonna hold you to go any further and collapse if you are bearish. Okay, so now what do you do? So we see that the market provides us a narrative as a rebalance into daily inefficiencies, is fair value gap, is it unfortunate fair value gap? So now we have to go on the 4-hour time frame to look how the market, if it is 4-hour time frame, gonna send us form a reversal pattern to short, okay? And see this Tuesday right there, it rebalances inefficiencies, okay? And Wednesday, the market bumps Tuesday high and made the high of the week and continue low, okay? So in this just structure, you can see that the market made the high of the week Wednesday, okay? And I'm gonna show you on low time how you can take advantage of the information when we are bearish and you see a potential the market to see to meet the high of the week Wednesday. That's beautiful. Okay. And as it so look how it was having difficult to close below this gap. And finally Friday it closed inside it. See, it's just a signature. But we can see more like to see the market expand the low and run below this low rather than seeing it really high to take out this high. Nope. Okay. So let's go on the 4-hour time frame. First of all, here I'm gonna show you how to trust the bias. Okay, after being stopped out. And this is the first rebalance into daily inefficiency. This inversion favor. You see that? This daily inversion favor. This is the first rebalance. Okay, this kind of right there. Monday, 22, tap it. Okay, but Tuesday, we clearly see that it disrespects this gap, which is gonna turn now as an inversion favor gap. Okay, so this is one of my entry signal like a disrespect of inefficiency. That's one of my entry signals. Okay, and what's happened here? Tuesday, the market rally creates this rebalance daily. inversion favorably gap, waiting what busy. Okay, so I'm waiting to see it disrespect this busy to have the confirmation that this high didn't need to be retraced to. So the market doesn't need to come into this high to sell short. Okay, so and as you can see, this kind of right there, okay, continue lower and disrespect this too busy. Okay, so I'm gonna look to short where execute into this inversion fairly and put my SLS where into this 4 hour short term high. Okay, but watch. This is the first signal. Okay, we are bearish. The market rebalance daily inversion fairly gap. Okay, and we think busy. Now what do we do? Now I have a signal to go short to see the market run below this low after having my entry signal and have to put my SL into the short term high. Okay, this one right there is short term high. Okay, but watch. This is how it works. Inversion gaps, SL short term high, and look to trigger to target. And as you can see, it's not a good position. But here, if you are executing here, you're gonna target not consequent encroachment monthly tell, but we're gonna look to target this inefficiency. I don't show you what this inefficiency is, but maybe later. And look what's happened. The market completely rally, okay? Completely rally. And Wednesday, 10 a.m., it completely run this high. So you get a stop out, okay? So the market stopped out us. But watch. What time did it happen? Wednesday. Okay? So when we have the first signal that fails, we're gonna not worry. Why? Because we're gonna trust that the next signal gonna be the good. Why? Because most of the time you're gonna fail just once. And if you are good and the buy is correct, the second signal gonna be the one. Okay? And this week the market completely move high resistance liquidity to run. And as you can see, what time did it happen? 10 a.m. Wednesday. Okay? So this is a great day, okay, to anticipate the market to make the high of the week Wednesday. Because what? We are bearish. Okay? You can make the highs on Monday, Tuesday, but if it gonna want to make it Wednesday, it's a great day to anticipate it. Okay? And as you can see, this is when we get a sort out after the market run above this high. Okay? So what do? We see the market run above the 4 hour short term high Wednesday, 10 a.m. So soon we see the market run above the short term high. Now we have to go on the hourly time frame to wait. It send us entry signal. That means it's gonna form a reversal pattern. That tells us it's gonna form and it's also gonna be into the high of the week. So watch hourly time frame and watch. See that? This is a high. This is a 4 hour short term high. Okay. The market bumping what time? 1 p.m. on the hourly time frame. New York kill zone. Think, bro. It's beautiful. New York kill zone. 1 p.m. Watch. At 1 p.m. CPI pop up and run this 4 hour short term high. So we get a sub top. Okay? But we're gonna trust the market gonna make the high was Wednesday, they're gonna collapse because we are bearish. And if it doesn't do that, we care less about being wrong or right. Trading is about skill set and probabilities. So when we see the market run above this high, okay, we gonna not worry. And as you can see, just above this high, there is this 1 hour sell side imbalance, buy side inefficiency. Okay, so after the market rally run above this high, okay, look this candle very close. See this candle very close right there. It just closed. You went through this gap, but look at the body. what it tells you. That's amazing. See that? Then it displays lower and shift the market structure and create a gap. Outstanding. See that? Then you're gonna collapse. So watch we have for our short term high. Look at it be engineering right at what? Right at 1 hour sell side imbalance buy side inefficiency. Okay? So now we can go on the 15-minute time frame, okay, to see how the market gonna form price action inside this 1 hour sell side inefficiency buy side sell side imbalance buy side inefficiency. Okay. So if you wanna see beauty of your chart and consistency, you just have to follow your high time order flow and trust it. So watch. Look the body very close. One, two, three, four, five. Five candles. Look at the body. Look at the body, what it tells you. See that? It tells you the narrative. The wicks do the damage. Look at that. That's beautiful. Then see candle wide there at 4:30, at 2:30. This space low close where? Below the opening price of this up close candle. Which is what your bullish order block. Bearish order block. Which is your bearish order block. Then soon it tap it, what's happened? It complete displays low. See that? Then create a gap. This is your entry mechanism. This is your reversal pattern. This is where you're gonna get short. Three things the market. This is gonna be the high of the week from at 145. You're gonna not see the market coming into this high. You're gonna not see the market coming into this high. Sorry, the icon I just get wrong. So we trust that the market gonna come back not into this high. Why? Because this is gonna be the high of the week. And if this is not gonna be the high of the week, it's gonna rally again. It's a us. That means that the weekly bar is not correct. So we're gonna sit for the rest of the week and wait to market tells more data and we're gonna come back to the next week. But few, we do not trust that it's gonna be the high of the week. What's happened? This gap right there after being created gonna be your entry level. You're gonna get him right there. Okay? Soon this candle touches the high of this candle, you're gonna execute. Put your SL as well into this short term high. And as you can see, this candle complete went higher. This candle complete right. What do you do? The market rebalance is 50 in favor in that institutional order flow until you. That's beautiful. So you have your execution right there inside this 50-minute sell side imbalance buy side emissions and put your SL as well into this short term high. These ones into the high of the week. That's even better. But you can put your SL into this short term because the market will not come back into this high. It's a difference of pivot. And where's the trigger? Watch. See this level right here? Remember, this level was what? Consequent encroachment monthly tail. Okay? That's gonna be the target. Just below this lows. Look at the beauty. You're gonna not worry. You're gonna not at all worry because the market tells you you're gonna get here. Not me, the market that shows us, and I'm able to read it. And that's the end of this video. I hope I add value and you're gonna take notes and learn. Exercise these levels and back test. And so next week, maybe before I do my analysis, the market can get into this low early Monday. But whenever happen, we can trust it's gonna get below this low. Why? Because it tells us it's gonna get here. The second signal have high probability to deliver. That's my model, ICT concept. Be safe.